Hey guys, my name is Chris, and this is the first video on my Woodham TCG channel. I'm a CPA who runs a bookkeeping business called Woodham Bookkeeping, and just recently started a business very creatively named Woodham TCG, selling trading cards on TCG Player. So what I thought I would do is make a series of videos going over the business side of buying and selling trading cards. This channel is not going to be about how to get set up on TCG Player, how to source your inventory, how to make those connections, get your bulk cards, how to do the actual selling of the business. We're going to be talking about things like the administration, compliance, making sure your financials are in good shape, making sure you're in compliance with any tax regulations. All of those things that are a little bit annoying, but can trip you up if you don't get these things set up correctly from the start. So I thought today we would look over how to track inventory. We'll go over why we track inventory. Why does it matter? Um, is it really necessary? Should we do it? And if we should, how should we do it? Is there a difference between tracking inventory for singles versus bulk? If so, what's the difference? What method should we use? How do we report it? We're going to go over all those things today. And I'm also going to be giving you guys a free spreadsheet that I will be using in my business. We're going to go over the spreadsheet itself, how to use it, how to do any data entry, how to use the outputs, how to make sure everything is accurate, what the numbers mean, all that fun stuff. There'll be a free download link in the description below where you can get your own copy if you want to go ahead and do that now, so you can go through the examples live with me, or do it afterwards and set up yourself at a later time, however you want to do it. So, first question, do we need to track inventory? The answer is probably yes. I will give the caveat, I am a CPA, but I'm not your CPA until and unless we enter into an agreement where I'm looking at your situation specifically. So I will be speaking in generalities. You should look at your specific situation and ideally do so with the help of an experienced tax professional who can help you out to figure out how do you need to handle your specific situation. But from my research, looking at the IRS guidance, talking to other professionals, generally, yes, it is going to be best to track your inventory for tax purposes. And I also recommend it for just financial purposes. It does make it a little bit easier to track your income and expenses if you match up your inventory with your sales. Inventory is a bit of a unique beast. Most of your expenses, virtually all, if you're a small taxpayer, if you're just doing this as a side hustle, if you buy something like your shipping supplies, for example, spend $50 on envelopes, team bags, top loaders, penny sleeves, whatever. You're going to expense those immediately because they were small amounts that you're using actively in the business. You're using those to ship out your cards to your buyers. Inventory is a bit different because you're buying things to resell at a later date. So the idea is to match the income with the expense. And until those cards go out to a buyer, you haven't really used that expense in the business yet. So it's a bit complicated. This may be the first time you've encountered that idea. But for the vast majority of you, the inventory is the only thing that's really going to be treated this way. Everything else is going to be a straight expense. Again, talk to your professional to see what you can expense immediately versus what may need to be expensed later. But inventory is the one oddball item for most of you, and that's why I want to go over this topic today. So IRS does have an exception for small businesses. Practically, though, it doesn't matter for those of us who are buying and selling trading cards. So if we look at publication 334 on our IRS website, there's a small business exception if your annual gross receipts for the past 3 years is $31 million or less. And I'm going to make the assumption that if you're watching this video, you probably fall in that category. If not, please contact me because I would love to do your taxes for you. That I imagine that'd be a nice high fee that I could get. Anyway, though, for the rest of us, this exception doesn't really matter because it allows us to either treat inventory as non-incidental material or supplies, or treat in a way that conforms to our financial accounting treatment of inventories. Now, non-incidental materials or supplies, it allows us to deduct the cost the later of when we pay for it or when it's used in the business, which means it doesn't really matter for us that much because most of us are paying for the inventory before we get it. We're not paying for it after the fact. And if we're reporting the inventory when it's used in the business, in other words, when we send it out to a customer, we're treating it as inventory anyway. Um, so it just doesn't really matter. I'm sure this has applications in other industries potentially, um, but functionally, it just doesn't really matter for us. And there is the idea of, okay, well, my financial accounting treatment of inventories is to expense it immediately. Could be. The guidance we've seen and everything from the IRS indicates that the bigger picture is it needs to reflect income and expenses accurately. And inventory is pretty clear cut and well established as how they want inventory treated. Um, so this seems to be a case where there maybe you could get away with expensing inventory immediately. Um, but I personally will not be doing that. I have not encountered anyone who will be doing it that way, who will be treating it as anything other than inventory, um, largely because we just cannot see. We see the logic of expensing inventory immediately, but all of our combined experience with IRS says that can't possibly be right, and we're just not going to do it. Um, Again, if you want to take that position, talk with your CPA. But if you end up working with me, we will be treating your inventory truly as inventory. We will not be uh, expensing it immediately. Now, if I can find my controls. Now that we've established that we need to treat our cards as inventory, what methods can we use to value inventory? If you're buying singles, so if you're buying specific cards, not just bulk, you're saying, I want to buy this card for 20 bucks, we're going to use specific identification. We're not going to be covering that topic too much today because that is going to be a different video. But those need to be separated out from your inventory and they need to be tracked separately. If you are buying in bulk, if you're just saying, here's my 20 bucks, give me 1,000 cards, and you don't care what's in there, you're not buying it for a specific card individually, you're just buying lots. We're going to be using one of 3 batch methods. The first would be FIFO and LIFO. That is first in, first out, and last in, first out. First in, first out is, imagine one of those old gumball machines. If you start filling it up from the bottom to top, it's reasonable to assume that the gumball that an individual buys came from the very first batch that you put in there. So we would take the cost of the first batch of cards we bought, and that's our cost of goods sold for that card. LIFO is the opposite. Imagine if you dump some gravel in a bucket and you just continually kept pulling from the top of the bucket and replenishing it as you bought new gravel. It's reasonable to assume that the latest batch of gravel that you purchased is what's being pulled out and used. So we would assign the cost of that last batch to your cost of goods sold for that period of time. Those can work for trading cards. They are a little trickier, in my opinion, to use. So my recommendation and what we're going to be talking about today is the weighted average cost, where we're simply taking the average value of the cards in your inventory, and that's the cost of goods sold for the relevant period. So what is weighted average cost? It's very simple. You take your beginning cost, so the total cost of your existing inventory, plus the dollar value of what you purchased in a given period, and divide that by your beginning quantity of cards, how many cards you had in your inventory previously, plus how many cards you purchased for the month, for your whatever period you're looking at. Take that number, and that is the average cost of cards that you had available to sell in a given period. This makes it very easy to track. It's as simple as, what was my ending balance from last month, added my purchases from this month. There you go. Very easy to use, and it's a very common method that's used in things like aggregates. So things like fertilizer, again, gravel, items that don't really have any functional difference between them. If we're talking about cards, there's no real difference between, say, a common Jigglypuff and a common Bellsprout. Doesn't really matter. There's no real difference there. So we're just going to put an average cost for each of those cards, because it is not worth the time to say this one is worth 2 cents, this one is worth 3 cents, and it's just a complete waste of time to get that down to that low an amount. Again, that is why for those higher priced cards that you're buying individually, we will do specific identification, because for those, the cost may actually matter. But we're talking about today, we're only talking about bulk cards and things that are not functionally different one to the other. You can take one card and replace it with another, and there's no tangible difference. So the spreadsheet that I'm about to show you guys is available via a link in my description below. If you want to download that, again, if you want to take the opportunity right now to download it, follow along live, or do so later, your call. Let's go ahead and get into it. So, first thing that you'll want to do is, I recommend saving, once you download it, I would save this wherever you intend to keep your inventory files. I would save the original as just its own copy, so you can always refer back to what the original was. In case anything goes wrong, formula breaks, whatever, things just go wrong. Maybe the save file gets corrupted, but that way you'll always have a base file to work with. And similarly, I'm going to assume today that we're starting in January is our first month of business. But if you start in April, August, October, whenever, just replace January with whatever month you start. So the first thing I would do is I would take that clean copy, make a copy of that original file, and I would name it, let's say I started in January of this year, I would name the file 01-2026 inventory. And I would do that for each card game that you're selling. So in my case, I would have a Pokemon spreadsheet, a Magic the Gathering spreadsheet, and a Yu-Gi-Oh spreadsheet. That lets us get a little bit more granular, because the average cost may vary between the games, whatever games you're buying and selling. We don't necessarily want to intermix the tracking of each game, because that'll make it a little bit messy. You can combine them into one inventory account on your financial reporting, on your tax forms, but just for the purposes of tracking costs, I would keep each game separate. Today I'm going to be assuming that you're only selling one game, but if you are selling multiples, selling multiple games, just make one copy for each of those games. I think it's probably the easiest way to track everything. So assuming I'm starting in January, I would make my clean copy, and I would make my file that says called 01-2026 inventory. First thing, I would come in, clear out this data right here, this sample data, make sure that there's nothing pulling through on this summary sheet, and then I would start recording my purchases. So let's say on the 4th, I bought some bulk Pokemon cards. let's just say I bought 1,000 cards. So I bought 1,000 and the cost would be 20 bucks. So you can see right now, it's evaluating the cost per card is 2 cents. My remaining inventory is $20 worth because I haven't sold anything. And at the end of the month, I have 1,000 cards in stock, total value 20 bucks. Nice and easy. Let's say I sold on the 15th, TCG player sales. Let's say I sold 20. And I don't know, let's say I sold them for an average of 5 cents. So I made $1. Let's say I made no purchases for the month beyond this initial one, no additional sales. The cost of card did not change because I didn't make any additional purchases. My cost of goods sold is 40 cents because I sold 20 times 2 cents equals 40. My remaining inventory value should be $19.60. Total cards, 980. And my total cost, $19.60. And I can see with this proof right here, I've calculated this 2 different ways. This is just a math formula taking the total cost plus my purchases less my cost of goods sold. So that's 0 plus 20 less 40 cent equals 19.60. And this is taking the average cost per card, multiplying it by my remaining cards in inventory to get 19.60. The proof says there's no difference. So I'm confident that my numbers are right. If you ever see this proof as anything other than 0, something has gone wrong. Check the formulas. The formulas are the same each month. So what you can do is just copy the prior month's formula, copy this, paste it here, and that should fix it. If not, you can always go to your previous month's file and rebuild it. Let's keep going. And let's say on the 16th, I bought another 1,000 cards at $20 a piece. And actually, let's say I managed to get this for 15. So this is dropping it to a little bit less than 2 cents. So it's going to be 0.175 cents. Probably repeating if I had to guess. Getting my cost of goods sold. Remaining inventory is $34.65. Total cost $34.65 because I have 1,980 cards in inventory left at whatever this number actually is per card. Again, a proof is 0. So you can see as you add purchases, even at different rates, it's going to update correctly. It's going to take the total card, the beginning cost, plus however many we plus the cost of our new purchases divided by the sum of our beginning cards and our new cards. Just like I showed you in the slide, that's the same equation here. Multiplying that number by the 20 that we sold, getting our remaining inventory. And you may be asking, well, I bought these cards after this sale right here. So why is that? Why am I including this sale in the cost of these cards? That's what weighted average cost allows us to do. If you're doing this on a monthly basis, it's saying that this is a perfectly acceptable method. Again, very common. It's how I'm going to be doing mine. And it's again because our purchases are largely interchangeable. Again, these are bulk cards. If you could trade out this set of 1,000 for this set of 1,000, you're not going to see a real difference. So we're allowed to kind of combine the purchases for a given month, even if the purchase happened after some of our sales, and we're able to use those later purchases to add to create our average cost per card. It's a bit counterintuitive. You would think you would need to say, okay, well, this batch of 20 cards must have come from this 1,000. And yeah, probably they did. but because of our weighted average cost, we're using a consistent method of valuing our inventory. We are able to use this method. And that is another important thing, that you do need to be consistent. Largely, if we're showing a consistent method of calculating our cost of goods sold, we're going to be in good shape. For using the same exact method, a defensible method, month after month after month, it's consistent. There's not going to be much debate that we're doing things correctly. Even if this 1,000 cards was not, none of these 20 cards came from this batch of 1,000, we're going to sell these 1,000 cards and they're going to get expensed at a certain rate anyway. And eventually our inventory is going to get worked down. These will be expensed out over time. Yeah, so it may be a new concept for some of you guys, but this is how the system does work. One thing I would note here, this is not meant to be a revenue tracking spreadsheet. You can use it as one if you want, but since it wasn't designed to really track revenue, this revenue number doesn't actually go anywhere. You can enter your sales here by day, week, month. I wouldn't go any bigger than month. I wouldn't do it by quarter or year or anything like that. But I could just do a 1/31/2026 TCG player sales. Maybe I would say January. And let's say I sold 500 at, let's say I'm bold and I sold them for $1 a piece. I could just put my January sales in here just as one line item. Everything's still going to flow correctly. So it just depends on how you want to do it. If you want to list them as day, if that would be easier for you to go, I sold this many on the 2nd, this many on the 4th, so on and so forth, you can do that. But the functionality isn't really built out to sum your revenue or anything. So I think it's probably an adequate way to track revenue if you have nothing else. But I would recommend not relying on it for your revenue. You need to verify it against other sources. Yeah, just a small note on that. And then you'll see the spreadsheet is built so that our end of month total cards 1,500, total cost 26.25 is carrying over to February. And because I don't have any data entered over here, it's carrying over to each month going forward. Again, if you started in, say, August, you would be doing all this work on the August tab. Same thing, they'll clear out the January data and just start in August. So once I'm done with January, I would save the Excel file and create a copy of my January file, rename it 02/2026 inventory, and then I would do my February work. Again, that's just so if something goes wrong in February, I can always go back to my historical January document, see what I did there, did a formula break or whatever, and make any adjustments going forward. Similarly, at the end of the year, the first thing you would do, I've built this out so that this is pulling the January beginning inventory, total purchases for the year, total cost of goods sold for the year. If you're only have one card game, this is going to basically map to your tax return. It'll show your beginning inventory was 0. You bought $35 worth of inventory, sold $875, and ended up with $26.25. With maybe some rounding in there because of the numbers that we're looking at. Again, we're buying 1,000 cards at 2 cents per card plus 1,000 cards at 1.5 cents per card. There's going to be a little bit of rounding variance there. But outside that small variance, this will be what you can take to your tax return or ideally give to your CPA and they'll put on your tax return. If you have multiple card games, this will of course be combined with other things. So this won't be your total, but it'll be your total cost of goods sold for a given TCG. And you can use that as a check figure to add up all of your cogs to see what the end result will be. Similarly here, there's a proof number here that is taking the December ending inventory and subtracting it from this inventory right here to get to make sure that nothing went weird. Again, if this is anything other than 0, something has gone wrong in the spreadsheet. Again, this is just a check figure, a guide. Always check with your CPA, whoever's filing your taxes, to make sure the numbers are actually right. This is just kind of a way that you can look and see what you're expecting for the year, to see what, to make sure your actual final numbers are reasonable. And then for when you start a new year, just like we did month over month, I would take the December, the 2026 inventory file, copy it probably into a new folder for 2027. Take your end of month numbers right here, 1,526.25, and for your new year, paste them at the beginning of the month for January. Clear out all this data right here for the year, and you can go from there. That's the only thing you really need to do to roll this over month or in year over year. Again, if this was all I did for January on my financials, I would move $8.75 out of my inventory account into my cost of goods sold account. I would expense $8.75 worth of cards, and that is what I would expense for January. Repeat that process for February, March, April, May. And this is our source documents, how we calculated all of our cost of goods sold for the year. It tells me what my ending inventory cost is. The big things to look out for here are just making sure you enter everything. Make sure you enter all of your purchases, all of your sales. If you sell somewhere other than TCG Player, you can have maybe a line item for, wherever, eBay or wherever you sell these cards. Maybe you have a line item for TCG Player, a line item for eBay. It's really just making sure that you track this on a monthly basis. I would, depending on the scale of your business, I would either do this weekly or monthly, depending on how often you're making purchases. If you're making purchases infrequent enough that maybe it's just a handful a month, this may be something you just do once a month. If you can stay on top of it, it may be beneficial to do on a weekly basis if you're prone to forgetting. Because that is the one weakness here is the spreadsheet is going to calculate everything correctly if you enter everything that you buy and you sell. It's not going to work if you miss a sale or if you don't enter a purchase. And that's another reason why I recommend creating new files for each month. Because if you do need to make an adjustment, you can always go back and see what you did, see where did something get missed, and kind of isolate it to a specific month and make adjustments as needed. Again, this spreadsheet is going to be available in a link in the description below. I have some how to use and tips right here that you can go over, largely covering the same thing we talked about here. If you have any questions, please feel free to reach out. I'll have my contact information over here. If I can find the controls again. Yeah, so have links in the description. One is going to take you to my website. I offer a $50 consultation for TCG sellers, both experienced and new. I'm going to be going over why I charge $50 for the consultation in a different video, but the long and short of it is you're going to be getting $50 worth of value. We're going to be talking about your specific situation. We're not going to be talking in generalities about how should TCG sellers do things. We're going to be talking about how should you do things. Concrete steps that you can take to get where you need to go. Not just, I'll look into this or that. You'll be getting actual real results from any consultation that you do with me. There'll also be a link in the description to this spreadsheet if you want to download it and use it in your tracking. Again, my website is at woodenbookkeeping.com. And if you have any questions, concerns, if you want to talk about any other bookkeeping questions you have, or you want to set up a tax consultation, I'm available at chris@woodenbookkeeping.com. Thank you guys for watching. If you have any topics you want me to cover, please let me know. I have a few ideas of what I want to look at going forward, but I would certainly be interested in hearing what your guys' actual questions are. Again, our kind of the focus on this channel is going to be on the actual business side of the TCG selling business, and less on the TCG selling side. And I also hope to post weekly updates on my personal business on on the results of my sales each week, so you guys can see how I'm organizing everything, how am I tracking things, what am I doing, and see how an actual business started from the ground up, so you can see it in practice and not just kind of the theory like we've been talking about today. That's it for today. Thanks for watching, and I'll see you guys in the next one.